Hi everybody, Alex Deploy here from Expert Forex, and in this video I'm going to show you how to transform $275 into $1 million using a very special trading tool. And the good thing about this is that this trading tool will be downloadable from the description and first commentary of the video. We're also going to look at a money management technique which allows you to double your account in 1 or 2 trades, and what that allows is for you to become risk-free or very quickly in this process. And then be ready for a very big surprise that I will disclose that could change your life forever. Now, all this started when I made this video on your screen where $763 was taken to over $200,000 in 19 trades, a success rate of 68% in a short period of only 5.5 weeks. This kicked the process off, and quite a bit of what you're going to see in this video was already covered in the previous video, but I'm going to go into a lot more detail about the trading ratios used. Then we went much further and we turned $275 into $1 million over a 3-month period. So the period was slightly longer, the amounts were so much bigger in this particular video that you see on your screen. And again, a lot of detail was given in that particular video. If you haven't seen these videos, I suggest that you have a good look at them. And then just recently I produced this video that gives all the details of the trading. In other words, it gives all the trades that actually took place, a list of all the trades, as well as you can look at those trades taking place on trading charts one by one, so you can actually see the entries, the exits, and so on. Now, these 3 videos have created quite a stir on the paid forum, and there's a lot of discussion going on. Okay, so let's have a look at some of these results that I spoke about. And here's this $275 that turned into well over $1 million with an 80% success rate. And these results were achieved by the Answer EA. Now, we have a whole lot of other EAs that are producing very similar results, and the EAs have been around for quite a long time. And here's an example of one, which is the tradable MACD. Here the MACD took $10,000 to $146,000. Now here's the thing, it did it on a 39% success rate. Now that doesn't sound right. How can you make so much money and on a 39% success rate? And that is in fact what happened. And the reason for that is that if you look at the average gain was 15,000, whereas the average loss was just under 6,000, and that is why it managed to make so much money with such a low success rate. Okay, so now let's get into some of the main areas of this video, and that is the money management concepts. So what you're going to see here is you're not putting all your eggs in one basket. If you have, for instance, trading capital of $5,000, what you're going to see is that only $500 of those $5,000 will be used for this kind of concept that I'm going to be showing you now. So in other words, you're only risking 10% of your trading capital, but that's all that's necessary to generate $1 million result. Now the other thing is that if you are risking $500 and in your first trade you double your account, then it's very good to draw that $500 out so that your account becomes risk-free. So I fully encourage this approach when using these money management techniques. And this whole concept is based on doubling your account in one trade, which is a very normal thing. If you've watched some of my videos in the last while, you can double your account in one trade using the maximum lot concept. You'll learn more about the maximum lot concept in this video and in future videos. Okay, so what I'm going to be showing you is an Excel model that analyzes the impact of going for a double your account in one trade and the impact of the losses that happen in that process. Because a lot of people think that if you're risking a lot of money or a big percentage of your account, that your account will not last for long. But this model shows you something different. What you'll see in this model is that you can start with a very, very small amounts. So your risk can be very small in the beginning, and then as it goes on, your risk actually goes up a little bit and then decreases tremendously later on. It produces fantastic risk management. And then the second point there that I've already mentioned, risk decreases considerably as the process moves on. And you'll see that in the model. Now, when things go wrong, that's the most important thing. A lot of people think, oh my goodness, there goes my account, things are going really wrong. The whole point of this model is to show you that you have lots of chances to bite back and get back on track. But there's a clear path, and you'll see the path to the $1 million. And if you deviate from the path, what happens if you go into what I call a ladder process? And this ladder process allows you to get back onto the path. So it's quite an exciting process. You on the path, you're going for your million. If you deviate from the path, you go onto a ladder process that will push you back onto the path. And because you're only using 10% of your capital, it is not a train smash if in the long run you have to give up the account that you're using right now and start a new one, because that's only 10% of your trading capital. But remember, what is being encouraged is that you withdraw. The minute you've doubled your account, you withdraw your original amount. So what I'm going to do is just show you in summary how the path concept works and how the ladder concept works. So it's a very simple model. If you are correct with the path trade, you'll just continue on the path and carry on from there. But if you incur a loss, and here's an example, you go into a ladder process. Now the ladder process says on the first ring of the ladder, it says, okay, I've made a loss, but if I make a positive trade, I'm back on the path. So that's the short way. You make a loss, you make another gain, and you back on the path. And that is because you are risking half of your account to double your account. And that so if you lose half and you double that half in the next trade, it means you back on your path. Now if you have 2 losses in a row, it just means that you've got to get 2 positive trades to get back on your path. So you might have 1 and you get to that ring in the ladder, and then you go down again, and then you go up again. So you can stay on this ladder for a long time. You don't only go straight down or straight up, you stay on the ladder for a while, and then eventually you'll get back on the path, and then you'll see the light again. So this is an example. If you've had 3 losses in a row, you simply need 3 gains in a row. If you've had 4 losses in a row, you simply need four gains in a row. And those gains don't have to be in a row. You can go up and down and up and so on. So you can have, as long as your net result is four gains in a row. And then lastly, 5 losses will require 5 net gains in a row. Now you'll see all that make more sense when we look at the model. So let's go and have a look at this model. I must just warn you, it looks pretty complicated at first, but what I'm going to do is I'm going to systematically take you through the model, and you should understand how it works. This model is also going to be downloadable at the end of the video. Okay, here's the model, and don't get a fright. It looks terribly complicated, but it isn't at all, and I'll show you why. Just to introduce how it works, the numbers at the top there are the number of trades that take place. So this model caters for 30 trades. And then here is the path. The blue is the path to $1 million. And you can see if you stay on the path here that you will reach well over 1 million. And there is the number that the eventual target will be. So there's the path. And then here is the yellow part is the ladder that explains why you can be on the ladder for a very long time, although you're risking half of your account on every trade. So let's have a look at this in a little bit more detail. So that's the general overview. Let's have a look at it in a little bit more detail. So when you come to this part of the model, so what I'm going to do is I'm going to move to the model to the end. That you see how it folds up quite nicely, because we only really need to see the first part and the last part. So here are the inputs that you can put in. You can put in your success rate. You can put in what your stops are going to be, what size stops you're going to be using, and what size targets you're going to be using. Now, in this model, as you can see, 50 pips has been set as the stops, and 100 pips has been set as the target. So it's a 2-to-1 ratio. Then you can see their maximum lots. Now every broker has a maximum number of lots that you can trade with that broker. Some have 100 lots, others have 50 lots. So this particular broker has 50 maximum lots. Now that is necessary because remember, we are going for $1 million. So you would put that in. If anything in this pinkish zone is input, the rest is protected in the spreadsheet, so you don't do the input there. Then it says what size account you want to use, and there's a $10,000 account being put in at the moment, and what pip values are you using, because for instance, yen crosses have different pip values to USD crosses and so on. So $10 is the normal pip value for a USD cross, so you just put that down. Now those are the only inputs you need to do, and the model will then calculate the results of your input. So for the first trade, there's number one is the first trade. If you're starting with $10,000 and you are unsuccessful, you will make a loss of $5,000 because we are risking half of our account on the trade. But on the other hand, if you're successful, you will make a profit of $10,000, which means you've doubled your account in one trade. This means that you can either continue on the ladder, or you can take that $10,000 out and make the whole process risk-free. So now let's have a look at what happens if your first trade is not successful but makes a loss, and we get back to that little model that I showed you earlier. So there we are. So now your account is down to $5,000. So now you're risking 2.5 because it's 50% of your account, and if you are successful, you will make $5,000. Now, if you take the $5,000 that you've made plus the account balance, you're back on track. You're back in the $1 million path. But if the next one is also a loss, so we go down the one rung of the ladder, and the account is now $2,500. The same applies. Your loss will be $1,550. And your gains will be $2,500. So if you make that gain, the $2,500 plus that put you onto the next rung of the ladder. So as you're going down, you can climb up one rung at a time, and eventually, if you're then successful at that level, you go back on track, and so on. So you can actually trade a long time before your accounting the money in your account actually runs out. There's the third loss. You can see the account at the end of the third loss is $600. The next one is $300. Then further down is $150. But you still got money in your account, and it still gives you the opportunity to climb up the ladder, and get back on the path. So that is why risking a big percentage of your account is not necessarily such a bad thing. Now, one of the things I need to show you, which is really good, is that we are using a $10,000 example here. Now, that's the whole idea of this model. You can go and play around with numbers. So what I'm going to do is say, right, let's see the impact after 30 trades of reducing that 10,000 to 5,000. Now, a lot of people say, oh, you're going to halve this number, but it doesn't happen. Now let me just change that to 5,000. And let's have a look. Look at that. It only went down about $100,000. You're still making well over $1 million. And that is quite amazing. A lot of people don't realize why this happens. Then you say, all right, well, let's go further. Let's reduce it to $1,000. So I'm going to reduce it to $1,000, and we say, and it's still producing $1 million. And I'm going to show you why this is the case. And it's quite amazing. So you say, oh, fine. Right, well, let's go push it even further. Let's go to $500. Let's see what happens there. And 500 is still producing $1 million at transaction level of 30. And you say, but this doesn't make sense. I thought I would be halving my outcome every time. And I'll show you why this doesn't happen. And then let's go to our number that we were mentioned earlier, the 275. We'll see how that goes. And that is still producing an outcome of over $1 million. Now, how does that happen? Now, for me to explain that, I'm going to have to open the chart up again. So let's do that. We'll open it up and give you an idea of how that happens. So that is why this system is so fantastic. You can start with a very small amount and build up to $1 million using this system. You don't have to use big amounts. So your risk, your effective risk is actually very small in the beginning. Now, let's just solve the problem of why the end result doesn't change much, even if you're starting with a small amount. Or the reason is the maximum lot imposed by the broker. So what happens here is if you start with $275, your lot sizing will be very small. So it's 0.28 is the size of your lot sizing. But because you're successful, your account doubles, your lot sizing starts increasing, your account doubles and increases all the time. So, but at some stage, it reaches the broker's maximum lots. And once you've reached that, you cannot increase the lots anymore. And as you can see, the lots stay the same after that. So it's only this first period where you're climbing up to the broker's maximum lot that there's a slight delay. And that is why no matter what number you put in there, you hit that 50 and you just stay on it, and you can see how long this one stayed, and that is why you continue, that you can make $1 million. After you've watched the video, think about it and then watch the video again, because this will start making sense. The other thing that happens is that when you are risking 50%, so you start risking 50% of your account on every deal, but then when you start hitting the broker's maximum lots, you are limited to how much you can risk, in fact. And what then happens in that is that effectively what you are risking reduces tremendously in relation to the balance on your account. So the balance on your account might be 70,000 there. So as you can see there, the maximum lots became 50,000, which means that you're risking $25,000 on the next trade. $25,000 of $70,000 is 36%. The next trade you can only risk 25%, but this time your account has gone up considerably. So the 25,000 that you're risking is a smaller percentage. It's only 21%. And then as you're going on, look how small the risk percentages become, and they even at the end here you come to a point where you are risking 2% of your account to increase your account to $1 million. That is the advantage of this. Once you pass that hurdle there, your percentages become smaller and smaller. And the same thing applies if you're negative at that point. You just go down the ladder, and you can go back up the ladder and get back on the path. And it just takes one or two successful deals to get back on the path. And it will take a very, very long time. If you look at this area where you let's say 870,000, if you go down the ladder, it takes even after 5 unsuccessful deals, your account balance is still very, very high. It is a very unusual system. A lot of people don't know about it. I have been using this system for 20 years. I was lucky that I was taught this system within weeks of being introduced into Forex trading. But it's going to take a while for you to analyze the results that are shown on the screen here, to convince you that the risk percentages go down tremendously, that you can still get to $1 million with very small starting balances. And the best time for your account to go bad is right here in the beginning, because you can then just reload it with a very small amount. So there is a starting amount of 275 that can be built up to $1 million. Very deceiving system. Spend time, when you download this model, spend time analyzing it and you'll see that it is a low risk. Although you're risking 50% of your account, it is a low risk way of making a lot of money, because firstly, you're not risking your whole account, you're risking 10%. So that 200 is 10% of a $2,750 account. So that's what's so nice. You can take part in this process with very little money and still have a chance of building it up to $1 million. Now, there are some technical things. For instance, you wouldn't put all your money in one trading account with a broker and let it run up to $1 million. You'd withdraw a considerable amount of your money before the time. And again, as you can see here, the balances that are left over after you've made quite a considerable number of losses still allows you to withdraw a lot of money out of the account. Now, I hope I haven't confused you, but this is exactly what happened with these results that you see on the screen. That is exactly what happened. The traders went up and down the ladder all the time, and especially the trader that only had a 39% success rate, went down the ladder a few times, up the ladder a few times, and so on. So both of these accounts used the $1 million path and ladder process. So you've got to understand this process quite well to really appreciate how these huge telephone number results are being generated. Spend a bit of time on the model and it'll start making a lot of sense. Now, these results down here were generated by the tradable MACD. We also are getting pretty good results from the tradable RSI, and some traders in the forum have also reported some fantastic results with our day trading EAs. Now, links to these EAs will be in the description of the video as well as in the commentary of the video. Now, as I've mentioned, there's a lot of discussion happening on our paid forum. If you want to be part of those discussions and see the results of other traders that are applying this trading process, then all you have to do is join the forum and take part in the discussions. So here are the actions. First one is to download the high risk Excel model. Have a look at it in conjunction with this video, and you'll see how you can play around with the targets, you can play around with the stops, you can play around with the amount in the account, and so on, and really try and fit it into your personal trading style. Then have a look at the other existing EAs that are producing these fantastic results. They're mainly the tradable RSI, the tradable MACD, and the tradable ADX, as well as some of our day trading EAs. Now, the next video will be a really interesting one in that I will go into this maximum lot process in a lot more detail, where you're risking the maximum amount on your account to generate these high returns. But that video, in that video, I'll show you a downloadable PDF that explains the process in a lot more detail. It takes leverage into account, margins into account, and has a specific formula that you can use. Then there is a actual maximum lot EA. It's going to be free, so you can download that maximum lot EA. You can trade it. We use that EA in our forum, and you can actually use that EA for free. Just a reminder to join our expert Forex community of over 30,000 Forex traders. It is free, so don't miss out on any new developments. A link is in the description of the video. Now, I hope you've enjoyed this video, and I hope you've learned a little bit about having an open mind and looking at new concepts from a positive point of view and seeing very unusual results being achieved using unconventional trading approaches, possibly approaches that you've never thought about before or never heard about before or even seen before, because this maximum lot process that I've shown you today is unusual. If you have any questions, please use the commentary facility of the video to ask them, and remember, any links in this video will be in the description of the video as well as in the first commentary of the video. So from me, Alex Deploy, cheerio.